Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, there's two elements for the Australian dollar since it's been coasting sideways for a bearish scenario to come through, and that is from a break of either of 76.95, which is about 40 points away, or some of us may like to see the level of 76.65 break, as that has been holding the Australian dollar up for at least nearly the whole of January. Now, from what I can view from the technicals, is the RSI is giving little away when it comes to the bearish case, but the MACD has maintained a negative bias, and therefore I do feel that eventually we will see a break to the downside. As long as we don't get a close above 77.95, then overall I would view the market to eventually break down, taking out either of these levels of 76.95 or 76.65 and look down towards the region of 75 cents. The US dollar, which measures the greenback strength against a basket of 6 major currencies, has hardly moved since Friday and still maintains around 90.15 and still pretty much focused on that inverse head and shoulders, where the break line or the neckline comes in at 90.80. A little bit of a step away. Nevertheless, let's still keep an eye on this technical pattern for the euro at the moment, which is weighted at 57.6 to the dollar index or the USDXY. I do feel from a technical point that overall the candles aren't relatively bullish, but the RSI has maintained a respectable firm bias, or positive signal that is, and the MACD has somewhat struggled to go with this current price action. However, let's see how the market plays into this week. We do have the FOMC, or the Federal Rate Decision, and no doubt the market will keep the Fed keep its rates on hold as widely expected. I don't feel there'll be much change there. So relatively though, for the economic calendar, it is a quiet week. Let's see if the market can take a step back towards the downside, and a close under 121.45 would give further indication for a move back towards a base that I view at the moment at 120. It has been quite a challenge for dollar yen on the top side as well as the bottom side. We had a rejection of 103.40, and now we're getting a slight rejection from this downtrend. As you can see, it goes all the way back to somewhere in June, July, and that is capping around 104, lower now, 05.25. I do feel from a technical point that the bias could still be positively to a bullish case, as this downtrend no doubt has got stop losses accumulating above this trend line, and therefore could see a trigger to the upside if we see a break and see a rise up to 105, or the cap I believe is around 106. However, a close under 103.40 would initiate a further down move to 102.80 and reassess from there. The pound still not quite getting that bullish case, and with the resistance of 137.45 to 65 capping, could still continue into this week and therefore see a move away from this level and look back towards the downside. We do need to see a break at 135 to initiate that next move. The MACD is flat and the RSI is somewhat lagging to support any bullish move, so we could still see a down test. Sterling yen still lacking the momentum to break above 142. Has had a few attempts, and keeping an eye on this pattern because I feel from a technical point that we may see a break and see a move up to about 143.5. Overall though, let's wait for the break because many a times has failed and may do again. Looking at gold, I'm still looking at that level of 1,878 as a cap for this week. I feel that safe haven demand is somewhat lacking, and the appetite could actually turn back to a bearish case, as because the MACD has broken down and continuing to maintain a negative outlook, with the RSI also marrying up alongside, and could see a move back to 1,820. A break below there would give further weakness to 1,765, which is still my preferred side at this present stage. Oil still backing away from that $54 level, and I still feel the market may actually break down further this week due to the technical implications and look towards $49.50 and reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to this new week.